Well, to break it all down, Sarah McKevitt, she is the senior real estate analyst at RSM US. Sarah, it's great to have you on the show this morning.
Great to be here. Thanks for having me.
Now, with 2025 set for improvement, but not a full recovery, what key factors will shape investor sentiment and real estate performance moving forward?
The spread between public and private valuations has narrowed significantly, which is allowing for price discovery within the marketplace, which will then spur transactions and bring much needed liquidity that's been sitting on the sidelines in the form of dry powder back to the marketplace.
And with capital ready to deploy and first movers at an advantage, where do you see the biggest opportunities now this year?
Multifamily is always going to be an opportunity because of the structural undersupply of housing in this country. Another place is last mile logistics in the industrial space. And office is also experiencing a new sector in the trophy asset component of office, which is highly amenitized and in low supply currently.
And how will moderate cap rate compression and high borrowing costs impact deal flows across the real estate sectors nationwide?
It's going to make real estate investors far more intentional, and they need to be really ready when they get into an investment. They have to understand the location, the supply and demand dynamics within a marketplace to ensure that they make the right deal within that market. And there's also the opportunity to join other parts of the capital stack and in the way of preferred equity or mezzanine positions, which is another entrance into real estate investments.
And I do want to get your take when it comes to financing conditions. How will those certain conditions and demographic shifts influence multifamily demand amid Sun Belt oversupply and affordability challenges?
Affordability challenges within the Sun Belt will continue to be a challenge for the next 2 years as the supply that's come online there continues to work through the market. But the long-term shift in demographics in that sector is expected to burn off in 2026 and improve and will moderately compress cap rates as that supply moves through the marketplace.
And it looks like major offices and multifamily loans are maturing in 2025. But how will lenders and borrowers adapt to this shift? Will we see more creative capital solutions?
Absolutely. I think lenders and borrowers learned their lesson in the great financial crisis and have learned, and actually in the pandemic downturn as well, where they've really learned to communicate with each other and work together to determine the best path forward in terms of financing for real estate investments.
And prime offices remain in high demand while lower tier spaces are struggling a bit. So what's the future hold for repositioning or underperforming office properties from your vantage point?
Right now, there's going to be an opportunity within that obsolete component of the office real estate market. That is when you have transaction prices that are far below the last transacted price. There's actually been a flurry of activity in the beginning of the year. A lower basis really gives real estate investors the opportunity to be flexible in their path forward, whether they want to pursue demolition or a conversion or significant improvements to the properties to attract higher credit tenants.
But we've also seen that shift, especially post-COVID, as so many businesses are now working on remote models, right? So talk to me about how that has impacted the broader real estate sector.
It's certainly impacted the way that offices are comprised, how you attract tenants. The spaces need to be far more flexible for collaboration on the days that people are in the office, but they also need to allow for deep work and concentrated work, and that will be especially important as these back to work mandates continue to unfold.
Now we have about 60 seconds left here. I do want to get your take, though, on how are advancements like AI and smart infrastructure shaping demand for industrial and commercial properties, specifically in high growth markets?
Data centers are in high demand right now, but that's a very specialized space, and investors in that space need to really understand the holistic investment thesis within the data center component. However, there's secondary effects within the industrial sector. If there's AI embedded within an industrial property, that is likely to be in high demand. But investors with those types of properties really need to understand if they have the right access to power, especially flexible power sources within the communities properties that they choose to invest in.
Well, thank you so much, Sarah. That was a lot of important information, a lot of key takeaways. It was a pleasure having you on the show. Again, Sarah McKevitt, Real Estate Senior Analyst at RSM US.
Thanks for having me.